Okay, trade with crazy version 10.4 review of 18 March market. Let's go right now to it. All right. Okay, let's just review what happened yesterday on the Dow Jones. As we can see very clearly, the Dow Jones yesterday opens and then it went down and went all the way to the KCB 41,420. Missed my target by 18 points and then rebounded. Oh gosh, okay. Now, one thing is that why we were bearish in the market was because I share with you the KSI was red in color. So when the KSI is red in color, right, we always prefer to sell than buy. So when the market is below OP, we sell one full lot size, an example. But when the market goes above OP, we will buy, but we buy half a lot size, example. So that's why we must know where to put heavy punch and when to do the light punches. So let's go through the motion of yesterday. Now, first thing first, when the market was ding-donging itself, right, what I didn't like was that it didn't go to KTR plus one. Because the day before, right, the market was up already by about 1%. So I thought the market would follow through. But when the market failed to stay above OP, right, that was my first worried sign. Then after that, we saw the market first along have a diamond at the bottom here, and then I draw a line across it, and you can see that the market failed to stay above OP, and then do a CCYR below the line, and that was where I know that it's time to short the market. So basically putting a white line across it. Once you do a CCYR, I shorted the Dow Jones. My stop loss is here. So this is my risk, my X, my risk. So by the time market cap here, I already up by 3Xs already. So we can book profit rather easily. Okay, then the market goes sideways. And then you can notice that over this period of time, the boys were all selling, the retail were all selling. So naturally itself, right, the market to go down is kind of expected. Yeah, it's not going to be a difficult thing to know, right? But as you can see after that, over here, the thing changed over. The boys became buyers. Okay, the retailers have moving upwards. So I know that the market will rebound very soon. And when I saw the diamond, I placed a line across it like this. And once the market stays above the line, I know that I can do a swing trade by buying here and putting my stop loss here or at the lowest point. So this is my X value that I actually involve in the market. So I'm not against my rule. See guys, when you sell below OP, it's called follow through. When you buy something from below, it's called swing trading. So being swing and follow through both does help, even though I advocate more to follow through than swing. But swing with diamond, with KSI, with everything in line, you do have a chance here. So when the market goes up to the OP, that was where I book up all my profits because I don't want to buy from the bottom. And I see the OP comes, I take my profit here. Then after that, as you can see, there were no diamonds around this area, which is a bit sad. I thought there were a diamond, I can short the market, but too bad it didn't. And then after that, the market started to go down again. I didn't do much over here. And then a diamond appear here itself, and I saw the KSI, KCX all coming in again. I placed a little short trade here. I bought a little bit upwards. Then the market ding dong, ding dong, ding dong, ding dong, all the way ding dong. I don't really feel comfortable. Now, one thing to note, when there's only one diamond here, you place the line across it. This line can be all the way usable. So which means that if the market stays above the line, this area here you can buy, okay? But once the market do a CCYR, you can sell instead. So I was just waiting and waiting and waiting for what? I'm waiting for this guy. Yes, the market is below OP, right? And the line is there. So once the market goes below, when the market goes below the line, and I know that the KSI, the KCX are all turning bearish, I know that it's time to short the market, okay? So what I do is I draw the line, and I saw this thing happens. I saw the reversal here. I short the Dow Jones again right here. So my stop loss that I shorted, right, I use this line to draw. I shorted here. My stop loss was here. So this is my range. Now this range, you say is big, right? No. Remember, it's always bullet divided by your range multiplied by contract size, contract value equals to size. So which means that, right, my average X itself, right, whether I shorted here and stop loss here, these X are the same. They are the same. The only difference is the range differentiate the volume that I'm involved with. So in this case itself, my volume is much lesser. So when the market come to this point here, I also only make back 2 X's. See, compared to here itself, I make back about 3 X's. Can see that? Can all see that? If you understand this, press number 2, right? Number three right now. Now this is pure risk management. That means that I throw equal punches, equal strength punches, but because the earlier one, the range is smaller, I can get 3 X's from the market. But the range is much bigger, I may get only lesser X's off. So the risk is still the same, the loss is still the same, but the earnings a bit different because of the sizing issue. Got it? Okay, so after that, the market recovered and came back down. My profit was given, and then after that, the market went sideways, and then you have a double diamond here itself. And then after that, I noticed the market actually held nicely at the pivot 2 level at 41,452. Then the market from there couldn't go down. Boys came in to buy, and that's where the market recovered as of today. So that's why now you must understand that you need to do price action combined with KSI, combine the KCX. Even KCX like now is blue color, right? But it's retreating from the low. So that actually represent the boys are coming in to buy. So this area here was a very good buy, but too bad I already slept by the time that happened. So I missed out that little buy there. So what a waste. Okay, let's talk about gold now. Gold. Now, gold is very clear. We told you yesterday that gold, as long as it stays above OP, is a buy. Now, because some of you tell me, Kel, but it's very, very high right now. It's the highest level a human ever seen. I understand. But then again, we have two things on the mind right now. You have the dollar that may be coming down due to the FOMC meeting. You have the Hamas itself really going crazy. But let's take note one thing, yeah. When you have this global geopolitical news that is pushing the gold, right? Once this so-called peace or this place, right, the market will pull back to where it started. So I'm not half surprised that you should draw the KCB targets like this. So if the market do ever pull back, right, it will cover back all these positions. Okay, it will cover. Trust me on this. It will take some time, but it will cover. So take note of that. Now, when I don't know. Okay, so yesterday gold was very clear. At the start of the day, it was just sideways very nicely. Then once you see there's a double diamond, stack diamond here, I saw the KSI turning green, KCX turning black. That was where I went in to buy my gold. So after that, the gold have a what do you call an add-on position at KTR +1. I booked some profit here. I see ding dong, ding dong, ding dong. Okay, after that, when the market finally have a diamond here, I draw the line across it. I realize that the market is trying to cross the pivot again. And we all know that OP is here, pivot 1 is here. If the market breaks above the pivot 1, it will become a classic buy signal. So from here, I waited under 3019 and bang, it went up straight away to KTR +2 very, very fast. So that is a power of either us or some leakage to somewhere else, and then this particular entity push the price so fast for us. So it was another profit level at 3025, but I have some residue, right? So I just keep on waiting. When the price pull back and hit the pivot and doesn't go down, I know that we have a chance. And then a 4 diamond appear, I draw a line. So I waited for a while until the market crossed KTR +2 with the KSI green, KCX black. That was a perfect line. I went in to buy again at 3026 and I aim for 3037. Why not 38? Because the highest KTR +3 is 3037.54. So to play safe as well, I took my profit at 3037. Of course, it went to 3038, but then $1 is fine. And you notice that after what happened, the market come down almost instantly until you see a double diamond right here, and then the whole thing just repeat. We just have to follow through. But this time around, the market failed to go to KTR +3. So you must understand KTR +3 is not so easy to hit, even though it's the first time you are trading it. That's not the market's fault. So hopefully those guys who have purchased will take some trailing profit along the way. Yeah, this is something that you must remember. Okay, guys, that will be all for today's revision. Sorry, I'm really back-to-back meeting. I need to go right now. I'll see what I can do later today for the Super Wednesday, because yesterday Super Tuesday I didn't do for y'all. Okay, guys, that will be all for today. Thank you very much. I hope you guys remember what I say about Bitcoin. Watch the Bitcoin carefully and trade well. Bye-bye.